Another nice day there for the tech stocks, up 0.4% as we welcome in Doug Flynn, certified financial planner, co-founder at Flynn Zito Capital Management. It's a big day because Doug's debuting a new series for us. We're calling it Tax Tip Tuesday. We'll get to that in a moment. Very exciting. But first, on the markets, we've talked about records all the time, you know, how we're doing well. And then I did think this warning from BlackRock, which is the largest money manager in all the world, was kind of interesting in that they're looking out at the world this year, 2024, and they think that people, investors, people in general, are underestimating how much risk is out there, that we're not appreciating that the quote-unquote geopolitical backdrop, in other words, world events, that things are getting worse. How do you see the world?
I think there are definitely spots around the world. I mean, they mentioned the Middle East being potentially increasing situation, making trade harder and adding costs, maybe keeping inflation higher as a result. So that can weigh in there. They mentioned China and Taiwan issues. There are issues around the country, around the world that can certainly. The market's kind of priced like everything's smooth sailing, admittedly. And if there are any of those things coming through, it's going to jolt the market a little bit. That's normal and to be expected, but they're thinking that the market is kind of expecting none of these things to happen, and likely something is going to happen. And so they're just saying, hey, maybe if you made a lot of money in the last 2 years with the market off those lows that it hit in the last 2 years before getting to the high, maybe you should look at doing something differently.
Am I reading that you think they're right, but you just think people know more than they think, than they're giving kind of us credit for knowing?
No, I think that the market is hoping that everything continues. People are coming into the market now because they see the news that, oh, it's good again, the market's high, let me get in, and they're not weighing in all the risks there are when you invest at the high with things that are going on. So it's wise to be weighing that in.
Look at the risks, as BlackRock is saying. As I said, everybody thought today coming in the big thing was the New Hampshire primary, but I told them in the meeting, I said, no, it's Tax Tip Tuesday. It's our new series with Doug Flynn. That's what the big story is. So we're going to try this every Tuesday up till tax day. So give us your tip for today. I know it has something to do with IRAs, right? And
it does.
The timing of when you can put your money in, or tell us.
Yes, and so I thought we'd start with something that you can still do for last year. There's not a lot of things you can go back in time and do, and making an IRA contribution for the prior year is something you can actually do up until the time you file your taxes in April. And the big thing about this is that a Roth IRA, as you may know, is you do put in after-tax money, but it grows completely tax-free, so that one day when you take it out down the road, you have this big bucket of tax-free money that is fantastic. And so the amount you can put away is up to $6,500 if you're under 50 and $7,500 if you're 50 or over. And you have to have below certain income limits. You have to make less than $138,000 as a single person, or $218,000 if you're married filing jointly. But if you fit that, it's something you should seriously consider doing, because once you file, you've lost last year to make that contribution, and then you can work on this year, which you should do also. But I hate to lose a tax year if you haven't done it. It's quite substantial if you can grab that before you lose it.
Well, that is a good one though, right? Because I think a lot of people would think that it is, you know, it's 2024. It's too late for this. But you're saying no. The timing is you can look back.
I've had some people do, hey, let's do last year and this year if they had the money to do that with, to get that in there. And real quick math, if you just do $6,000 a year for 20 years, and just at 7 to 8%, right, you can amass over $250,000. And it's nice to have that tax-free. Look, you'll thank me 20 years from now if you have that you have this big bucket of tax-free money that they can't take away from.
I remember that guy on NewsNation. I really appreciate him. So we do appreciate you, Doug. Thank you, sir. We'll talk to you again soon, Doug Flynn, on that. And that's a new series. We'll have it every Tuesday from Doug. Tax Tip Tuesday.